Good afternoon. Good morning, everybody. I hope all is well. And everyone's excited to talk about everyone's favorite topic of the day, which is sanctions. Just before we kick off today, I'd like to just say we are recording this webinar, and the recording will be shared with registered attendees after the event. Unauthorized recording, including via AI tools, is not permitted. So please, if you have any note-taking software, please disable it. But we will present a version of this to everyone who's registered for the webinar afterwards. Really glad to have you all with us here today. I know sanctions is a topic which has been literally, Irina, we were talking half an hour ago with the rest of the company because it is 100% something everyone is trying to wrap their heads around because it's such a big topic. Um, for those of you who don't know me or have met before, I'm Nick. I'm the Chief Intelligence Officer at Crystal. I look after the intelligence collection and analysis side of Crystal. So the team that I manage is responsible for understanding like what's going on in trends, but also adding data to the platform. And I'm joined with my colleague Irina. If you would like to introduce yourself quickly.
Sure. Hello, everyone. Here at Crystal, I'm leading compliance initiative and as well here to support all the compliance officers, all the money laundering reporting officers, and to answer all your questions. Thanks, Nick.
Fantastic. And just for your side, we have put some polls up that will happen throughout the presentation. If please feel free to engage with us, ask questions in the chat. If we'll do our best to try and answer them for you as we go through. But by all means, please chip in with it. And unsurprisingly, most of the people who have joined our conversation today are from a compliance and AML background, because I'm pretty sure this is on everyone's in tray at the moment right now. So we're all fairly familiar with sanctions, I would think, from the audience. I think everyone has been around sanctions of some regards or another and understands that they are measures used by states to uh, control or to manage financial activity by, an adversary of some description. And they've been used in crypto for a very long period of time with early designations such as Tornado Cash or Garantex, which I think most people will be pretty familiar with. However, in the past 2 or 3 months, things have really escalated, and really sanctions in crypto have become a huge talking point as many states have sought to use this as an economic lever against their adversaries. There are lots of different sanctioning authorities out there. To date, we know of about 6 or 7 different bodies who've designated specific cryptocurrency wallet addresses. Um, However, now there is an increasing trend just to name services and require financial institutions, cryptocurrency exchanges, whoever they might be, to manage their interactions with those services depending on where they're licensed. So how the hell did we get here? Like, what happened? Well, in 2022, the EU passes the eighth package of sanctions against the Russian state, which means that crypto payments to EU wallets were banned from Russia. Basically, if it's a Russian originated transaction, it cannot be sent to an EU institution. By 2025, we're on the 19th package, and we have the designation of Garantex, which had been designated by US OFAC back in 2022 itself. In 2026, Grinex, which was believed by many to be a successor entity to Garantex, was designated by the EU, and we continue on through sort of this kind of building up package. The EU has applied a fairly advanced notice kind of model in which the services have been given time to adjust their compliance frameworks, their risk-based approach, in anticipation of the announcement of the 20th package, which has far-reaching implications for businesses. On the contrary, in more recent times, just to sort of get on the sanctions bandwagon, the UK has also passed some pretty big sanctions in the past week and a half against a major international exchange, HTX, for its role allegedly for routing funds from the Russian sanctions evasion to support the state itself, which again is a huge landmark thing. HTX is roughly the ninth or 10th by volume, the largest exchange in the world. So it's a pretty significant service to have this kind of categorization against it. It's certainly the biggest designation to date. And as with everything that happens in cryptocurrency, its designation was accompanied by a lot of drama, as always, with HTX turning to social media to convey to its users what had happened, and in many cases stating that there was no risk associated with receiving funds from ATX's website because it was a different legal entity. That was information that was challenged by UK uh, Treasury, which basically said, no, it's not at all the case. All things that involve HTX's website are considered within the scope of the sanctions announcement. So huge changes in things. And from what we're seeing and what we're hearing, this is certainly something that's going to trend. Not content with letting us rest a little bit, on the 2nd of June, so literally a week ago, the US decides to sanction the major exchanges in Iran, Nobitex, Wallex, Bitpin, and Ramzinex. There are obviously many other exchanges inside Iran too that operate, but it certainly is the largest ever Iran crypto action, and now moves services from just being subject to restrictions to actual designation, which has different consequences. Irina, I think probably a good time now for us to explain, well, what is the difference between these things? Like, what's the difference between designated and being sanctioned?
Sure. So European Union 20 sanction package is interesting not because of the number of the new names added to the sanction list, right? But because of the what it tells us about the direction sanction compliance is taken. If we look at the sanction historically, the focus was often on identifying designated individuals, sanctioned entities, blocked banks, and prohibited transactions. Compliance teams build their controls around screening names and ensuring that those listed parties could not access financial services. Today, and what's the difference? Regulators are asking a different question. Instead of asking only whether a sanctioned person is involved, they increasingly want to understand how sanctioned persons continue to access financial system despite the restriction already in place. And this is where the sanction package number 20 become particularly important. Let's say it reflects a broader shift from targeting individual actors to targeting the mechanisms used to circumvent sanctions. And the focus is increasingly on intermediaries, third country structures, hidden ownership and arrangements, alternative payments channels, crypto services, OTC brokers, and many other routes that may provide indirect access to the sanction ecosystems. So for compliance officers, for money laundering reporting officers, this means that sanction compliance is becoming less about finding a direct hit and more about understanding the exposure and what kind of questions we might ask, right? A customer may not be sanctioned, a company may not be sanctioned, an exchange may not be sanctioned, but that does not necessarily mean that there is no sanction risks, right? The question is increasingly become whether the customer, company, or service is facilitating access to sanctioned jurisdiction, sanctioned sector, sanctioned financial institution, or sanctioned person. So this is not entirely new, let's say. For example, if we look at the US that has applied ownership and control principles for many years through OFAC guidance, FinCEN guidances. Also, what Nick's mentioned, United Kingdom has also long focused on ownership and control, including situations where a designated person exercises influence through corporate structure or some intermediaries. So European Union has similarly recognized ownership and control concepts for many years, right? But what has changed is that the expectation that firms understand these risks in practice. So for example, regulators now expect firms to look beyond a simple company registration document. They expect firms to understand beneficial ownership, source of liquidity, transaction flows, counterparties, jurisdictional exposure, and the economic purpose of their relationships. And again, this is not something new, right? But this is particularly relevant in crypto markets and becoming more and more important, where the funds can move through exchanges, OTC brokers, stablecoins, self-hosted wallets, and multiple jurisdictions within a very short period of time.
Yeah, it's a really big change actually, and you're right in saying, how things have really shifted in terms of the landscape. I think the big thing that I have noted is that the tool of sanctions has become increasingly relied upon. And as you said, like the speed at which you can move assets and crypto assets is definitely something that regulators have picked up on and want to do. They want to figure out how to sort of reduce this as a way of circumventing other financial controls. To your extent, though, Irina, I think like before I'd say like there was an easy space in, not there was a particularly easy space in anything to do with compliance, but there's kind of an easier thing where you would get the name of a service, and if you have a designation of that service, it's very easy to sort of screen your incoming
Mhm.
transactions from that, right? Like you rely on your KYT solution, we find the addresses that are associated with the service, we have an ongoing burden to sort of keep that on top of that, which is a different issue. But then you screen those incoming transactions. The changes I think that really matter now is that, as you said, it's whole sectoral and there's not a defined specific service. It's now you're looking or you're required as a service yourself to look at the economic pivot of the transaction and its relationships and who they're dealing with, which adds a whole lot more work on top of, the compliance team who are
Mhm.
managing many, many other things. It means also now that there is a whole spectrum of nuance in terms of like what you consider to be within the scope of the regulation and what's outside it. There are definite rules you have to follow, but because they haven't said a specific service, there are some, but because they haven't said specific services, specific activities need to be screened against. And I think that makes things really challenging. We've got a nice example to talk through, so I don't want to get too far into the weeds of that yet, to go forwards. So what changed on the 23rd of April? I guess you could sort of like cover off like what would you think the biggest changes were on the 20th of April or 23rd
Yeah,
of April, sorry.
Yeah, 23rd of April, let's say it's the date we all remember as a former compliance officer, right? And putting myself into the shoes of compliance officer, I would always imaginate what I would do, right? If we receive this kind of order of the new sanction package number 20, and we would probably think it in the way of the three categories of indicators then we could spot in the 20 sanction package, right? And this is the easiest way to think about how we can understand what's in front of us. Is it a sanction entity or it's not a sanction entity, right? So we have three categories of the indicators. Let's call them the first category is the direct indicators. This includes sanction ownership, sanction entities, sanction bank, sanction wallet, or direct dealings with the listed parties. These are usually easier to identify and typically require immediate escalation, right? So it's freezing of the assets, blockage of the account, and reporting to the proper authorities. So second category is indirect indicators. These are often much more challenging, even on our side, and examples include exposure to high-risk OTC providers, repeated interaction with entities operating in sanctioned jurisdictions, also opaque ownership structures, unusual routing of the funds through third countries, or business models that appear dependent on restricted markets, right? And the third category, let's say it's contextual indicators. This may include language, right? Customer demographics. So we see that they are targeting Russian-speaking audience, right? So meaning we can conclude that probably they may have some connections with the Russian market. Marketing focus, right? Historical business activity or other factors that on their own do not create sanction concerns but may become relevant when combined with the stronger indicators. So the key lesson from the 20th package is that compliance officers should avoid focusing on any single indicator in isolation, right? But the real assessment comes from the understanding the wider picture and determining whether multiple indicators, like you see on a slide, right? There is exposure to the sanctioned stablecoin. There is mentioning on the website they're targeting Russian-speaking audience, right? Or there is exposure to the digital ruble. So that's whole give us understanding that there can be a sanction exposure, right? There can be sanction circumvention or indirect benefit to a sanction ecosystem.
Yeah, absolutely. And definitely if you're in that kind of space where you do cater to markets that are sanctions adjacent markets, there's a big, large number of Russian speakers, not just within Russia, and we'll talk about that in a second. But if you are adjacent to those markets or your clients' clients are within that marketplace, your obligation is very high. You need to sort of really look into that and figure out what's going on. I see a question in the chat from Pratik. I will try and answer it as we go through. We don't answer it directly, but just as a general statement too, we're providing you with some general discussion topic around sanctioning. This isn't constituting legal advice, and I think if you do need specific support with your sanctions package or programs, it is absolutely imperative you seek qualified legal counsel. Like we are here today to try and explain some of our viewpoints and angles around it, to talk a bit about where it's come from and where it might be going to, and some of the things that you should consider as part of your package. But we are not here to give you legal advice. You really should seek that from retained counsel or something similar, just to be absolutely categorically clear on that. Um, because there's a lot of nuance involved in this, it's really important that you record your decisions and you explain why you got to the point that you did. And again, we'll talk a bit about what that means for us as an analytics tool as well. Okay, so let's look a bit and sort of ties in nicely with what Irina was just discussing um, about discovering, relationships between entities and things that would be high risk. So we're all fairly aware about Nobitex. I think anybody who's been around crypto long enough knows that Nobitex is the largest cryptocurrency exchange in Iran. 50% of its flows are attributed to the service, although there are many other services in the country. Iran has a large crypto adoption percentage. I believe, according to domestics figures, it's around 20%, which is a higher rate than the US, for example. So it's really important to try and understand the landscape inside there. Nobitex wasn't specifically designated before. It was always going to be something that required more nuance from a receiving counterparty. But what was the thing that tipped it over the edge? Like, what do we think tipped Nobitex from just being, a destination inside a sanctioned territory to a designation itself? Well, I think this really comes down to ownership specifically. So, an article published by Reuters, which we'll have a look in a second, basically tied ownership of Nobitex to the inner circle of the IRGC, so Ayah Khamenei. And as a result of that, as well as its exposure to various services that were linked to IRGC activity that had been sanctioned otherwise, it had enough to push it over the edge and into that kind of situation. So, what does that actually look like in reality? Well, we did some analysis on this to try and figure out how it happened, and we have the individuals on the chart who are sanctioned. So, Syed Ali Khoury, Amir Hussein Rad, who was the former CEO, is now the chairman. We have Syed Mohammed Bagha Karazi and his two sons, Ali Karazi and Mohammed Karazi, who go by different names if you see them different in other places. What really tied it and made it clear to us that these people had a relationship with Nobitex was the registrar contact. So again, thinking about your enhanced due diligence mechanisms, what sort of things do you go to check? As Irina said, you can go and check the website. What languages do they have on the website? Where are their customers located? Um, what are your counterparties offering in trading pairs? Do they have access to Sberbank or things that might tip you over the edge? In this particular case, we needed to go a step deeper than that, which was to look at the domain registration information. When you look at the domain registration information historically, you can see that there is a record that shares a contact email address between Nobitex, his domain, nobitex.net, and Imin Hadi Charity, which is a charity of which one of the brothers, Mohammed, is a board member, and his father is the chairman. That ties it together quite nicely to show that there is a relationship through that email address to that domain, to that charity, to those two people, which then brings it together. Notably, too, that the contact email used to register the domain, which bear the name of Syed Mohammed Agamir Muhammad Ali, was a Karachi, ended in Karachi as the surname of the email address. So it really sort of like ties it all together quite neatly, that they are belonging together. Um, Importantly, too, the father, Syed Mohammed Bagher Karachi, himself is, if you go to his Wikipedia page, which there is, he is also Secretary General of Hezbollah in Iran, and he was also allegedly a religious teacher for the current Ayatollah Mojtaba Khamenei. So really quite a big sort of tied up thing here. But thinking about the level of due diligence, it goes well beyond what you're going to get in a KYT solution. You need to do some of this research is going to be screening your counterparties very carefully and not just looking at the signals from your platform, but also looking for other corresponding signals that might do that. And again, notably inside the EU 20 announcement are requirements for you to check, beneficial ownership and directors when you're considering if something is to be sanctioned or not. To sort of like tie it back to how we do it at Crystal, we have a big amount of work to go through and review all of these services to try and discover those connections. So we are almost having to do shadow enhanced due diligence on these services and to come to that kind of conclusion on our side. It's a huge amount of work, but very much the nuance is now really, really important. So I guess, Irina, you could talk a bit about like soft versus hard indicators and how that works.
So, as I mentioned, right, we usually divide indicators into three categories, and we have, let's say, in between of the hard indicators, soft indicators, there are also medium ones, right? And if we speak about the hard indicators, right, what I mentioned, what Nix gave you as an example, right? It's can be even some connection to the sanctioned jurisdiction. It can be sanctioned beneficial owner, sanctioned director, sanctioned shareholder, sanctioned wallet exposure, sanctioned bank involvement, etc. Medium indicators, which are not on a slide, but we can just understand it from the 20 sanction package of European Union, that these do not automatically create a sanction breach, but require enhanced due diligence. So there is two different approaches, what the action should be taken when we receive a sanction hit, right? Or when we receive the understanding that might be an indicator, a medium indicator or soft indicator about the sanction evasion scheme. So those examples include that OTC liquidity providers, repeated interaction with the Russian exchanges, use of high-risk third country intermediaries, also nominee shareholders, unexplained combination of the jurisdictions, right? Stablecoin activity replacing traditional banking channels. So these indicators are often signal to potential circumvention, right? And again, in comparison to the medium ones, we have soft indicators, which are, as we mentioned, a language, rule, or any other sanction country domain, customer base, historical operations. So these indicators alone should not justify rejection, right? However, when combined with the stronger indicators, they become relevant. The key compliance principle is one weak indicator rarely mean anything, right? Only multiple indicators pointing in the same direction become when it becomes intelligence. And actually on the different approaches in European Union, in United States, and also in United Kingdom. Interestingly, that the Office of Financial Sanction Implementation, they applies ownership and control tests specifically to prevent sanctioned persons from hiding behind complex corporate structures, proxies, or even intermediaries. So more importantly, the FCA recently published findings and encourage you to read through, showing that sanction compliance failures frequently arise not because firms lack screening tools, but because of the weakness in governance, due diligence, ongoing monitoring, alert handlings, investigations, and evasion detection. So this is an important lesson. And regulators are increasingly reviewing the quality of decision making rather than simply asking whether screening exists, right?
Yeah. I think as well, and it's a really important thing, and that's a really thing is like, does screen not just do you screen transactions, but do you have all the systems behind it? Like, are you actually checking who the money's coming from, or are you just looking at an alert and saying it's within my risk profile, I can carry on normal business? I just want to say too, is there's two things that I feel that this action by EU 20 is something we all need to think about. And the first one is like countering of front organizations. I've long said it, anyone who's heard me speak about any sort of crypto crime for a long period of time says the easiest and most efficient way to launder money in crypto is to start your own exchange and create a front, basically, in front of your sanction activity. You can create an exchange and receive volume from the high risk or sanction counterparty, and then you can represent it as a lower risk score to the next hop. Everybody knows that all tools work on signals, and the last most significant hop is the one that we care about. So if all the money comes from, a high risk jurisdiction or a sanctioned jurisdiction into a service in the middle, and then the middle puts it forwards to you, there is a chance that that thing in the middle is a front, right? It's there deliberately to shelter the final destination from the source, which is a way of trying to circumvent the efficiency or effectiveness of the tools. In a similar sort of manner, the use of decentralized finance also appears. If you look at the Iran central bank case, which has been widely reported on, the Iran central bank used a very thorough, almost nine-stage process where its money was moved through a variety of transactions before it appeared on a completely different blockchain, even in the same format, before it was presented to services afterwards. And I think it's important that, if we're in a sanctions compliance mindset, and now there are, real legal penalties set up now by the EU, and we'll not talk about enforcement because that's a different matter. But if there's real penalties inside it, you really need to understand now, if never before, who your counterparty is and really who they are. Not just that they have a risk score of, 40% or whatever else, but who are they actually? Like, who is the beneficiary behind that platform? Who are their clients? Who are their customers and services? Who are they working with? And understand whether or not you have obligations under the regulations for that. Um, so I think at this point, then I'd like to just jump forward a little bit. Let's just do something a little bit practically, and I just want to give like some general, statements on how we view compliance in crypto right now. First and foremost, not everyone who speaks Russian is Russian or lives in Russia or Belarus. I think that's a really important statement to make. And having a very expansive attitude towards that, you are going to create a program which excludes a lot of normal users or potentially normal customers, which you don't necessarily need to. They are going to have a risk factor, but it's not going to be the end of the world if someone speaks Russian or their platform has Russian language support, because they also have diaspora populations. Not everyone lives within the country, and not everybody in that thing is subject to the same level of controls. Similarly to Russia, there are lots of Iranians who live outside the country. There are not all of them live within the country. Although Farsi as a language is mainly spoken in Iran, there are some other offshoot places where it is spoken. There are lots of Iranians who live outside the country too, who will use cryptocurrency services. So we need to be mindful of that too. And I think the bottom line I'll say is that compliance is risk management, and that needs nuance and more than ever before, local understanding and nuance to be an effective program. That is local understanding and nuance, not just of how to identify threats and how to ensure that you are not exposed to them, but also ways that you can understand and interact with clients who don't deserve to be put in the same bucket. You're denying yourself business if you don't understand the people you're interacting with. And more than ever before now, you really need to have a good panel of people who speak and understand the cultures in which these languages are spoken and where these sanctions are pointed to, because they are going to help you find the information that detects evasion, but they're also going to make sure that you are identifying things correctly and not just putting everyone in the same bucket. And I think it's really important that we say that. The last thing that anyone wants to do is impact financial inclusion through a draconian or overzealous sanctioning program within a business. It's very easy to completely de-risk everything and make life straightforward and simple, but you're going to run into a point where you're going to end up with no customers left. You need to have nuance around it, and that's how you manage risk. I don't know, I mean, if you got anything on this too about nuance and why it's important before we go into our case study.
Yeah, actually, I want to just comment. Of course, we have these soft indicators, right? But also we should not forget, and you mentioned the Nobitex case, right? We shouldn't forget that it demonstrates a very important compliance principle, right? We have not only the sanction risk, right? We have a jurisdictional risks, which existed for Iran for many years, right? So before become sanctioned, compliance teams, they should have assessed Nobitex from the jurisdictional risk point of view, right? So that's important as well, that it's not only for the sanction risk, it's not only for the ownership structure, right? It's not only about designated sanctions list, but it is also about jurisdictional risk. FATF gray lists, high-risk jurisdiction lists, right? That we should all follow a similar approach and look at the risk-based approach, right? So it's profile of the client, it's jurisdictional risk, it's product risk, it's delivery channel risk. So all in combination should give us the full picture, including the target audience and language.
Absolutely. And like I said, it's that nuance is so critical. And I think also just in the back of this too, not to counter us too much, but just be very careful around cosmetic rebranding. Like a service might onboard to you and they may have changed their website specifically to sort of like remove some of these soft indicators which would potentially push up the threshold, and then they will change them back later. So let's say I strip out all the information that ties my service to operating inside, a sanctioned jurisdiction, but then I continue to market the service within that territory. It's clearly that those things are against each other. They've done something cosmetically. So again, it's really important to have that nuance. It's really important to have people or services that understand that thing at a local level. So let's talk about a service then, Irina. I think I'll leave you on the spot a little this one. I'm going to approach this study as a compliance officer. So we've been checking in Crystal Expert. We've got this alert. It's a deposit transaction, and you can see the counterparty where the money came from. It's something called Money Club Exchange, which is a cash desk. You can see I did it today. It's an unlicensed exchange per our types. You're not sure who this is. You can see it's a cash desk, so you're told to go and review the service. You go to the directory page for the service and you look at the registration info and you can see that it's located in Thailand at this address. And you click through and you find that this service is a cash desk that's operating in Phuket. And you can see that there is some language on their website too. We now come to the outside. We go to a bit of Google Street View and we have a look at the outside of the premises. Irina, can you see anything on this that would alert you to product and service risk so far? Like, what would you be looking for?
Oh yeah, for the people who can speak and read Russian language, right? We see some of the familiar colors, familiar brands of previously sanctioned banks, I believe.
Yeah, so just to sort of give you an idea about how ADD can work. So we can see they have obviously language, so that's a product and service. Okay, it's maybe some of their target customers. As Irina said, you can see in the bottom of the slide, we've got some stuff that's related to Russian banks, some of which are sanctioned, so Tinkoff and Sberbank, as well as Kaspi. We can see on the Google reviews page, we can see that there are some reviews in Russian language, not necessarily indicative of Russian users. And if we look on the on-chain perspective, we see that there's some interaction with designated on Russian services. So we kind of go from this very narrow perspective of, okay, it's a service that's operating in Thailand, but actually by looking at the local context, by looking into the service at a deeper level, we identify all these additional risk factors. So sort of like to tie it all together is, well, okay, who's the product and service? Who's this designed for as a particular user? What I'd be wanting to do now is understand, well, actually, there's a lot of Russian speaking tourists who go to Thailand on holiday. It's probably how they're moving their money around. I've got other risks inside this service, such as it's a cash business, as well as the fact that it's catering to particular individuals. Irina, how would you treat this transaction from a compliance perspective?
Yeah, I would say that this is probably the best practical example for today's discussion, right? So the question is not whether the OTC desk is located in Thailand, right? The question is whether the OTC desk is acting as an independent liquidity provider or whether it is acting as a gateway for the sanction activity, right? So this is a very different assessment. As a compliance professionals, we would want to understand who owns the OTC desk, who are its customers, what banking relationships does it use, what jurisdictions are involved, what wallets are involved, what exchanges are involved, what does this transaction flow actually look like, right? The first slide that you showcased to us. So if we see the exposure to sanctioned banks, like here, sanctioned entities, high-risk jurisdictions, opaque ownership structures, or repeated indicators of circumvention, we would escalate, right? And the answer is not necessarily immediate rejection. The answer is enhanced due diligence. What is the source of the funds? what is the source of the wealth, wallet screening, counterparty due diligence, travel rule information where available, of course, and most importantly, documented decision making, right? So here, let's say with the whole enhanced due diligence, with the whole information in place as of today is what we see on the slides, right? It is definitely with having all of this combination of the soft and medium level indicators, we would assume that it might be used in the sanctions convention.
Exactly. But again, I think the point here too is it will come down to what your interpretation and your risk-based approach says, like what way you want to go in towards this. I think interesting too, and this is one of the advantages you can have with an analytics platform is look at the counterparty exposure. So you should get some information in that says this is the source of funds. Look at the counterparty exposure of the whole entity. Look at the counterparty exposure of the whole wallet. Understand the relationships they have. As Irina rightly said, who's the liquidity provider for this service? Where did the money come from that they're using, they're providing to you? It can't hurt either to double check as well what other tokens it supports. Does it have A7, A5? Does it have RubX? Are these things that you need to worry about? Because again, if it has those things, those are already strong indicators that you can say, okay, right, I need to do something about this. I might need to apply the actions from the sanctioning authority. To sort of like round it up then, like we have a couple of things we put together, like what we've heard questions from clients and from colleagues about it. Just to talk about the crystal response to this. So when we got indications of the 20th sanctions package coming, we went through a comprehensive review of all our entities in our database and started to categorize ones that would fall within the scope of EU20. And we have our own internal methodology for doing that, which our clients are privy to. You can see how we come to the determinations that we do. Again, we are just providing you a signal. We're not doing the EDD for you. You still need to go and do the extra work and make sure that you're happy with the counterparty being what they are. We can help maybe filter that list a little bit, but there is a real responsibility on you as a VASP now to understand, if ever before, like who your counterparty is and who their clients are. That's the really critical one. We have a few questions here, and one of the first one I just want to tackle is analytics is post-factum. What do we do about such transactions? So what I mean here is that we work on this program of attributing wallet addresses. We know that one of the sanctions evasion tactics that is commonly used is to cycle wallets. We saw that with Garantex at the early outset of their designation. OFAC gave us a whole load of wallet addresses associated with them. We applied them in our tool. Within a week, they'd all changed to new ones, and the frequency and cadence of them cycling wallets to new ones became more and more and more and more and more. So what you unfortunately have is that we only know what we see when we discover it, and that's when you know about it. And we work really hard to be as fast as we can to find the new wallets. But what do you do about transactions that you've received that are post factum? Like I've already received it and it's recently been added to that attribution. What should I do about such transactions? And I guess that's a great one for you, Irina, to try and tackle. What would you do with that data?
Yeah, so this is probably the question I receive most often from compliance officers. And the reality is that regulators do not expect us to prove criminal conduct, right? Sanction evasion or illicit activity beyond any doubt. Compliance is not a criminal investigation. And what regulators expect is that we apply a reasonable risk-based approach and that we can explain our decision-making process. When I assess a customer, I rarely look at the single decisive piece of the evidence. Instead, I look at the overall picture, right? What we mentioned, what's the ownership and control, what's the jurisdictions are involved, what about counterparties, what the source of the funds, what the transactional activity. So one indicator may not mean very much, but 5 indicators pointing in the same direction are a different story. So the question should not be, can I prove sanction evasion? The question should be, would I be comfortable explaining to a regulator tomorrow why I accepted or maintaining this relationship? If the answer is no, then additional due diligence, escalation, or boarding may be appropriate. Ultimately, sanction compliance is not about certainty, right? It is about reasonable judgment supported by evidence and, of course, documentation.
Yeah, I think that's a really, really important thing. And I think that kind of ties in with the question that was asked in the chat, which is, okay, you're going to have to justify why you made the decision in a certain direction. Are you comfortable with explaining that to someone if they're asking for you? And remember, there is strict liability in some cases for the decisions you make. I want to pick another question from this list. And I really want to talk a bit about how do designated services react to sanctions and what can you expect them to do? I kind of alluded to it earlier, which was services like that, they immediately respond in a number of different ways, but mainly on chain, we see them moving to new infrastructure. When we've had sanctions announcements for some authorities, we get an accompanying list of hot wallets, which is really helpful for us because it means that we can have a data point to work from. So we work really hard to gather all the data we can on services. We always try to gather as much information as possible, particularly in high risk or territories where there's a risk of sanctioning taking place. And we have a very, very capable team for doing that, which is why, we know so much about Iran and Russia. But the reality is that as soon as that designation happens, we see like a variety of things. And the main one is they'll change infrastructure almost immediately. And they've now got to a point where they will change infrastructure almost immediately every day now, and sometimes more frequently than that, to try and counter attribution by on-chain analytics platforms. What happens after that point is we start getting into degrees of certainty when it comes to attribution quality. So the ones that the sanctioning authority has said, yeah, these are their wallet addresses, we can treat them as a benchmark that is correct. But the ones that happen after that, we are trying to keep up with their patterns and we start getting into, probabilistic territory. When we are looking at it from a crystal perspective, we are very robust in how we try to understand those relationships. And things you might want to look for are things like, liquidity movements. We can look for gas stations. We can look for transfer of high balances. We can look at, deposit address activity. Things like that will help us determine it. But again, the frequency is really, really high, and we have to work really hard to do that, which kind of feeds into that other point of the post-factum. They're moving, we're trying to keep up with them. We're trying to figure out what they're doing next. We're learning their patterns. When we learn their patterns, they tend to change them, which is another thing that we notice. Another thing too is we see the public reaction, and we don't just see it necessarily on chain, but we also see statements from individuals associated with the services. So some of the individuals designated by the EU and UK more recently have taken to their social media to sort of like say it's a badge of honor that they were pleased that they got sanctioned. It just proves that they're doing a good job. Others sort of turn it on its head in other ways. HTX has been a very interesting one for this one and how they've responded to the UK designation. They, as I said at the start, they immediately jumped onto social media, almost discussing it similarly to like a technical outage, saying how it had been happened, it was a mistake, it's a misunderstanding, and doing their absolute best to try and preserve the integrity and the view of the platform amongst its customers. So you can see that the designation had a real impact on, the confidence of the infrastructure and also its users too. And again, maybe shaking some of those sorts of things underneath it. Um, we see like continual posts and messages about it, and a lot of discussions, and obviously in the fairly unprecedented step, HTX saying that the OFSI designation was only against its Panamanian entity, Huobi Global SA, and not against the actual website itself, which HMT basically turned around and said, no, that's not the case. It applies to all the website, which is a really, really, stark kind of thing too. And I think it's important on that note to understand the spirit of what was done with the designation as well. There could be a legal grey area there where you could exploit it and say, actually, do you know what? Those transactions were nothing to do with the parent entity. They're a sub-entity, it's a franchise, they're not related to each other. The reality is, look at what they've said in their announcement. When they've said HTX and they've identified a particular legal entity because they need one to sanction, they can't do it against just a URL of a website. For the legislative perspective, you need to understand what the spirit is. And again, if you think it's going to get you in trouble, if aren't prepared to stand up and defend why you took that decision, obviously it's probably better to avoid that in the first place. Irina, I think another good one then is, I guess to conclude it, is like, are compliance teams becoming too risk averse? Like, do you think that this kind of passing of these sanctions is going to make compliance teams way too risk averse to a point where, it reduces their ability to operate?
Yeah, I think this is one of the most important discussions taking place in compliance today. As sanctions become more complex, there is a natural tendency for firms to become increasingly conservative, right? Sometimes this leads to blanket decisions, and we see it as well among our clients. let's say one of the, it was before, it's not happening now, but there was sometimes a request, please switch off everything what is more than one hop, right? So there is no more this blanking decision, so they want to see further than one hop, so rejecting entire categories of customers or not looking at the exposure, which is more than two hops. Of course, it's no more the approach. And even rejecting entire jurisdiction is not happening, knowing that crypto business is global, right? So, but there is a difference between managing risks and avoiding risks. And risk-based approach means understanding the risks and applying appropriate controls. De-risking means avoiding the risk without understanding it. And regulators have repeatedly highlighted concerns regarding blanket de-risking because it can undermine financial inclusion and push activity into less transparent channels. So as a compliance professionals, our role is not to eliminate all risk. Our role is to identify, assess, manage, and monitor risk. That requires judgment and it requires evidence. It requires understanding of ownership, jurisdiction, counterparties, and transaction behavior. And of course, what Nick mentioned in the previous question, right? Who are your affiliated entities, right? We remember the affiliation rule, which comes from FinCEN guidance and many other jurisdiction guidances as well. So most importantly, it requires the confidence to make a decision and to explain that decision afterwards. So the question should never be, how do I avoid all risk, right? The question should be, have I understood the risk well enough to make a reasonable and defensible decision?
Absolutely. And I think that's really, the most important thing is document it, explain why you got to the conclusion you did. There's that. I'd say as well is I think a theme that we have throughout this is that your compliance program around sanctions is a combination of people and it's a combination of technology. We have lots of things to help surface information that will help you make a decision better, right? You have a really powerful tool, Crystal, for example. Like we have a directory, we have lots of data points inside there. We have mentions about the entity, which will help support your understanding of the entity itself, like understand where it markets or what it's doing. Like that's all that data is within Crystal, and you can find it, and you can look at their counterparty relationships, and really that's it. The second part is, the actual people itself, and really ask yourself the question: do you know who your clients are? Where are they located? How do they market to them? What channels are they doing? What languages do they speak? What's the risk that they present to me, as Irina says, and it's understanding the people as well behind the technology and not just looking at it as a flat number on a screen. It's really, really important. I think the other part is looking forward. Like if I'm a compliance officer now and I want to stay ahead of the trends, I want to know what's coming next down the road, like what is the thing that I need to think about or worry about the most? Irina, what would you be your biggest threat right now? What would you say is the biggest challenge or the biggest threat to compliance teams, and how would you stay on top of that?
Yeah, I would say the biggest challenge is that to keep the balance between false positives against the risk of missing a true sanction exposure, right? And this is one of the biggest operational challenges for compliance teams. If we investigate everything, we overwhelm our teams and create unnecessary friction for legitimate customers. If we investigate too little, we increase the risk of missing genuine sanction exposure. So neither extreme is effective, right? Good compliance is not about eliminating all the risks. Good compliance is about understanding risks and applying proportionate controls.
Absolutely. And if you want to stay ahead of risks and you want to understand about how risks are changing, the new techniques and tactics that are being used to avoid sanctions, and various other things like that, always worth staying in touch with us at Crystal. We do a lot of research, not just on the technology side, but we are very, very hardworking when it comes to the people side. We really try to understand not just the product, but also the people who are using it and why they're using it. And that will definitely help you with a risk-based approach. You'll help to understand those things massively. If I want to leave with a final thought, and we've talked about a lot of things today, and we've tried to give you as much practical advice as possible for your compliance programs. Nuance is really important, and I think it's been a common thread throughout our conversations today with Marina and I, is understanding your clients and understand your clients' clients, and the nuances of doing that is absolutely imperative. You can have the most powerful tool in the world, you can have all the data available to you, but if you don't understand the people who are using the technology, then you are blind to the level of risk that you're taking. You are either applying too much or you're applying too little controls, and it's really important to understand that distinction between the two. I think that brings us to a conclusion. Um, Irina, do you have any final thoughts before we wrap it up today?
Just a brief one, the future of sanction compliance, which never ending, right? It's only growing, is not simply identifying names, it is understanding the ecosystems more and more.
Yeah, absolutely. You need to see the whole picture. And I'm proud to say that Crystal can really help you with the whole picture in many sort of ways. Thank you all so much for your attention. I know it's a challenging time. I know there's lots of things to sort of consider and unpack, and everyone's looking at the level of work that's coming towards us to deal with this. But in your journey to understand sanctions, risk, and exposure, we are a very, very competent partner. We're more than happy to talk to you, as well as explain some of our ways of discovering enhanced due diligence and things like that to sort of support your program. Thank you for your attention. I hope you have a lovely rest of your day. And yeah, please stay in touch, stay on our socials. And if we see anything interesting, please just drop us a line and we're happy to help you. Thank you.
Yeah, thanks a lot.